Hello everybody, welcome to a new video. Today I'm gonna show you a very profitable strategy that is gonna help you in your trading, especially if you are struggling and you wanna find a good but basic and easy strategy. You don't have to be an expert, okay? Because this is very straightforward and the only thing you need is just like pure price action, okay? So show reel. Okay, what this strategy is about, it's you have to understand pretty well market structure. Okay, this strategy, okay, it's gonna be about double tops and double bottoms. First, you need to identify. Step one is to identify a trend happening. Okay, for a bullish uptrend, what do we need? We need higher highs, okay, and higher lows. Then after that, we need to see price failing to break the last high. And after that, what do we need? We will need to see a break of structure. Okay, you will have the trend going up, and after that, you will need a break of the low, the previous low. But not only that, you will not enter in that breakout, but you will enter with confirmation only. That's why it's gonna make it more profitable than just like a breakout strategy. Usually breakout strategies they are good, but they will lack of that extra confirmation. Okay, like they're not so profitable because usually you're gonna be stopped out, and market makes a lot of fake outs, especially by wicks. Okay, so you would need like a very tight, not tight, but like wide stop loss. But in this case, we're gonna wait for this. We'll need the retest of the previous broken structure, or what they call it, the neckline. Okay, double tops and double bottoms are very profitable because it will show you the end of a trend. Okay, so instead of trying to catch this top, selling it, okay, you will catch the trend finishing but with confirmation. And the same goes for a double bottom. Okay, you will have to first identify, that's the step one, identify a clear trend. Okay, lower lows and lower highs. But after that, you will have to see price failing to break the previous low. Okay, here you will have a low and price failing to break the previous low. And what you will need is to identify the neckline, and you will just need to wait for price to break that neckline, the previous high, and then you will see a break of structure, price retesting. That will be your confirmation, and enter. Okay, this is very profitable and it gives you usually a very good risk reward ratio because you will enter based on confirmation. Okay, and the stop loss usually is going to be very tight below the broken zone, and you will go and reach till the next zone. Okay, so let's go to the charts and see some examples. Okay, example number one. First of all, this works in every time frame. Why? Because the market is nothing but fractals. Okay, so you can go either to the 5 minutes, 4 hour, 30 minutes, whatever. Okay, it's gonna work exactly the same. You just need to have a good grasp of market structure and the price action. Okay, so you have to train your eyes to see this formation or pattern, whatever you're gonna call it, and it's going to be very profitable as long as you wait for a confirmation and not just enter whatever whenever you see a double top or double bottom happening. And of course it's going to work better on the higher time frames, but I like to use the 15-minute and 30-minute time frames because you can get really good positions. Okay, so first step is we have an uptrend, obviously. Okay, as you can see, price in here, it made this low. Okay, price failed to continue going down, so broke this kind of like base. Okay, retested, and it started a new trend. We had higher highs, higher lows. Okay, was pretty well formed, higher highs, and as you can see in here, what do we have? Price failed, right, to keep pushing up in here. Okay, price reversed, made a fake out. Usually that's what's gonna happen when you are trying to identify these double tops and double bottoms. You will usually have a fake out. Okay, this in the lower time frame is gonna look like some wicks. Okay, actually in the higher time frame, sorry, in the 1 hour you will see as if it's like a wick, but here we are in the 30-minute time frame and it closed back below, okay, this high. So now what do? We just wait and identify for, we identify the neckline. Okay, the previous low, which is this one, and simple, like we just wait for price to break. Okay, breakout, retest, and we enter. So here we have this candle closing below. Okay, that's the first step, and these candles right here coming back up to this flip zone. Okay, to the previous neckline or base or support or whatever you want to call it. Then what do we have? We wait for confirmation and we enter. Okay, stop loss above the previous candle, and we aim for the next zone. Okay, which would be around here, and that's it. Just enter, and there you go, you have a good winning trade. Next, actually in this same example we will have also a double bottom. Price made this low, okay, rejected from this demand zone, made this high. Then what happened? Price should have continued, right? Like going down, retest, go down, but it didn't. Instead, it made this double bottom. So now what do? We wait, identify the neckline, okay, here we have it, draw it, and now we wait for a candle closing above. Now I know in here we don't have an obvious retest, but since this candle already broke above and it's pretty small, it was safe to enter, okay, on the close, because it was pretty small and pretty tight. Stop loss below the low and take profit right by the neckline of the previous zone, which was in here. Okay, and that's it. Like, it was pretty good. It was pretty good trade. Okay, let's go to another example. What I like about this pattern is that it happens like basically almost, I would say, every day or 1 or every 2 days. So you can have at least like 2 to 3, 4 trades per week, okay, especially if you're scalping the market. So it's just a matter of training your eyes and looking for opportunities. Okay, so in this example we have a clear option, right? First step done. Then you want to identify price like failing to make a new high. So in here we had the previous higher high and then price making this fake out, okay, of this high. Price price failed to break above, then what do? We have to draw and identify the neckline, which is in here, okay, and we have the candle closing below, which is this one. Then we have the confirmation, and we could have entered right here, okay. Stops above the candle, and we could have targeted the next zone around there. But if you wanna hold your trades, if you're like a more longer term trader, swing trader, you could have like easily catch like the whole move. As you can see, like it was like usually, like the thing about double tops and double bottoms is that it is the start of a new trend, okay. Finishes the current trend, and this will start the new trend. So you can like catch like really huge drops or rallies. And in this case, let's see how much did it drop. It was around almost 350 pips, so it's like really good. I'm gonna show you this example actually happened. You could have seen it even like on the 4 hours. On the 4 hours, you know what will you see? You will see 2 wicks happening. That means that on the lower time frame, these are candles. Okay, we have one, you have two. And I will show you actually a little tip you can do. You go to the line chart and you will identify them easily. Okay, like you will have like this double top. So it's pretty easy to identify. And look at this. In the previous example that I showed you, also we had these we had 2 wicks happening. Okay, then it went up. So that's it. We have this other example from March 24. As you can see, look, if we go to the line chart, it's gonna be so easy to see. Can you see? Can you see? Like it was the start of a new trend happening. We have previously this double top, it dropped almost 350 pips, and now we have this another formation. Okay, neckline breakout, and now this is like what is happening like from last Friday. So let me go to the candle and let's go to the lower time. Okay, as you can see, this is the 1 hour time frame, and clearly we have the double bottom happening. Okay, so we had the downtrend, that's step number 1. We have price making the last low, then failing to make another low. Okay, we identify the neckline. Here we have it. Next, we wait for the breakout, that's the candle, okay? And then we wait for confirmation and we can enter. And we place the low, the stop loss below the low, and you could have targeted the next zone. First TP could have been here, okay, in this area right here. It was pretty clear. You can see price touched and like try to reverse and continued, and the second TP could have been around this area, and your final TP could have been around that area because it was a Friday and you wanted to secure some profits. It was a pretty good trade. Like look at that, like stop loss 20 pips. I ran for 185 pips, and this happened in just one day. Can you see that? Like actually was day and a half. So there you go, guys. I hope you learned something from this and like you can use it in your trading. And if you're a beginner, this is going to help you a lot. Just a matter of training your eyes, following the steps and waiting for confirmation. And I promise you it's going to be very profitable, and you will see changes in your balance. Just focus on one thing at a time. And as you can see, you don't need any indicators, nothing complicated. It's just a matter of identifying the pattern and entering, and that's it, guys. So if you like the video and learned something from it, you can like and share the video, and I'll see you into the next one.